Hi everyone, it's Diloshan here, and welcome back to Real Estate Watch. If you're new to the channel, I break down what's really happening in the housing and mortgage markets without all the noise. So hit that like button, subscribe, and let's dive right into it. So what's going on in Canada? The biggest update from the Bank of Canada Deputy Governor Rhys Mendes. He basically said that the bond market is putting too much weight on the wrong inflation numbers. And here's why that matters. Because investors are looking at the core inflation sitting around 3%. But the Bank of Canada says the real number is actually closer to 2.5%. And that's a big deal because the closer we get to the 2% target, the more room the Bank of Canada has to cut rates if the economy slows down further. Now, south of the border, things are a bit more messy. The US government shut down because Congress couldn't pass a funding bill. So that means no new economic data, no job reports, nothing until they reopen. And bond yields haven't moved much, but expect more volatility as traders try to guess where the US economy is heading without any fresh numbers to guide them. And regarding mortgages, in Canada, bond yields stayed flat, so fixed mortgage rates didn't really move. Variable rate discounts also stayed the same. Right now, the odds of another Bank of Canada rate cut in their next meeting on October the 29th sit around 20%. But personally, I believe there's going to be more cuts ahead. Historically, the bank doesn't start really stimulating the economy until rates drop to around 2% or lower. And we're now at 2.5%. And in the past rate cut cycle, they've gone below 2%. So I think we'll see that again. And if you're shopping for a mortgage, here's my advice. Don't focus on how much you can borrow. Focus on how much you can comfortably afford. The bank doesn't care if you ever save for your retirement, go on your vacation, or eat out at a restaurant. They only care about whether you can make the payments on time. So build your budget based on your real life, not the maximum that the lender will give you. And here's where I stand in terms of mortgage strategy. Fixed rates are sitting around the long-term averages. So between a 3-year and a 5-year fixed, I still like the 5-year, slightly better value overall. But if you can handle a bit of uncertainty, variable rates still have the edge long-term. Why, you may ask? Because I think we'll see more rate cuts over the next few months. And just make sure that you can handle the ups and downs, both emotionally and financially, if the cuts don't happen as fast as you expected. So what do you think? Will the Bank of Canada cut again this month? Or stay put until December? Drop your thoughts below and let's chat. I'm Diloshan and this is Real Estate Watch, helping you stay one step ahead in Canada's ever-changing housing market. Thanks for watching and I'll see you in the next one.